right. Hello, everyone. Welcome to another episode of Faith in Home Buying, equipping people of faith for the home buying process. And today it's Audrey and I holding it down. Audrey, say hello.
Hey everybody, thanks again so much for having me. I'm really excited for today's discussion.
Yeah, no, it's going to be a pretty good one. And, I want to make sure that we have all the time to do it. So, and just to cover just the topics, because not only I know I, as the agent, have been experiencing it in my team, but I know you have as well, especially with the changes that have happened in rates.
Mhm.
And, they've been dramatic though. They've been like, it's been a lot more in a short period of time than I've ever
Mhm.
seen. And I
Yeah,
think that's what gets people kind of acting a little strange when it comes to home ownership
right.
now.
Mhm.
So we're
Yeah.
going to talk about that. We're going to talk about not only that, we're going to talk about what that means as far as rate hikes, increases, what it means for you as a buyer, even what it means for you as a seller. When it talks about rate locks, what is the difference? Should you lock, extend? How long can you extend? We're going to talk about all of those things because I think they're very important to make sure that number one, you can navigate the home buying field without fear. I think that's the biggest thing. The last thing that I want like my clients to even think of, or even my sellers too, is fear, because fear will get you nowhere. There's always something, especially in real estate, there's always a way out. There's always a way that you can maneuver and make this market work for you in the best possible way, whether you're a buyer or you're a seller. And that's what I hope today to accomplish for anyone that's out there contemplating buying or selling. Hopefully, we give you some tidbits to help you be successful and to go out there with a bunch of knowledge, at least some, and so that you can make this year be your year for home ownership, or this year that you can have a successful sell. So, Audrey, yeah, all these rates rising. What's up with that? I think we're at 7% now.
Yeah, some people are a little bit under that and some people are a little bit above that. Of course, rates are based on how much you're putting down and your credit score, how much you have in reserves, but overall they're ticking up. And I love how you started it out by saying, "Hey, we just need to talk about what's causing people's reactions to this. How are people feeling?" Some people are okay with it, some people are not. And it's really about managing that fear and managing how people are perceiving information. Because I can say there's a lot of wrong information out there too. And so when you analyze the data, we know exactly why rates are going up.
Yeah.
They're curbing inflation. So this is all in cycles. So when you look at the history of real estate, when you look at the history of how the economics work, we know exactly what they're doing. We know why they're doing that. And we know that it's going to have a repercussion afterwards as well to drop the rates back down once inflation is curbed. So this is all manageable data. So we just have to look at everybody's individual situation and give them individual advice based on what they're trying to do. And it's going to be different for investors versus somebody looking for a primary residence.
Exactly, and we're going to break down what that difference is too in this time, because that is important too.
Mhm.
How you're approaching it as a consumer buyer, regular, versus it being an investor, and what you're looking at with your portfolio and your timing, and what type of investor you are. Whether you're a buy and hold, or a fix and flip type of
Mhm.
investor, private money. Obviously that's going to make a difference. But let's concentrate
Yeah.
on our regular kind of run of the mill buyer
Mhm.
coming through. Had
Yeah.
this happen, where they've been waiting for a little bit, homes now, a little bit more homes in the market, still low inventory, but there's still a little bit more homes that they can choose from. Then, we're going through, and then all of a sudden it's now 2 months and they've already had their pre-approval. We've already went through that. But now, they had to get reevaluated with their lender. And now they're looking at, uh-oh, I was approved for X, but now I'm only approved for here. Or have to bring in more money in order to get this mortgage payment. Let's talk about those things that have been happening in the midst of all of these changes.
Yeah, absolutely. So I think the number one important thing is that to think about, if everybody's reacting the same way, then everybody's going to, it's going to be those that see the value that are going to go against the norm that are going to benefit from this market. So if you
Right.
think about how everybody always talks about how do people gain wealth? Well, it takes a little bit of researching, a little bit of gumption, and you gotta stick with it. So if you're having that fear of like, oh no, I have to wait, I have to pull back, don't let that fear paralyze you.
Mhm.
Here's really what it comes down to is, how does this impact our normal home buyers? Is, of course, just like Tamika, you mentioned, it's going to change. You have to
Yeah.
really analyze with every single offer, because what if you're going for the maximum of what you can afford, we're never going to push you past your limits. So that just means that we have to stay within your limits, and those limits will decrease as rates go up. So with every offer, we're having to reanalyze this, right? So it's
Mhm.
important to be aware of your numbers, be aware of what you can cut too. I talk to so many people, and if you cut out a few little things, you can still get back up to where you
Yeah.
were. So I think that it's a good refresh. It helps you delve into what's really important. What do you need to move around in your finances? We're never going to give you something that you can't afford. If we're comparing affordability, we were talking about roughly a 500,000 purchase.
Yeah, let's talk about that.
Mhm.
What's the difference?
So yeah, so if you're looking at a 500,000 purchase price, let's just say with 10% down,
Mhm.
because we are encouraging people, if you have that wiggle room, put the
Yeah.
least amount down. A lot of people are thinking that they have to liquidate their stocks
Yep.
right now. Don't sell them while it's low. Try to buy some right now. We look at your overall financial picture, so try to
Mhm.
keep that money. Try to buy stocks right now. But if you're putting 10% down on a $500,000 purchase price, estimated principal and interest, that's not what the rates are, by the way. I have to say that.
Mhm.
I'm just giving
Yeah,
examples
right,
here.
right.
Yeah, your difference, if it goes from a 5%, let's say, to, or 4.5% to a 7%, that's a difference of $600 to $700, just
Yeah.
depending on your final taxes and everything. So that's
Mhm.
that window is kind of what you're looking at. So you'll either have to bring in that difference in the down payment so that we
Mhm.
can keep you at that purchase price, or we'll have to drop that purchase price a little bit to make sure that that payment's still affordable.
Yeah, but see, that makes sense, right? So if you go in
Mhm,
with already on your mind, okay, I could
mhm.
do 20%, but if I actually have it, at 10%, I have a little bit of room in order to, as rates continue to adjust or do whatever they're doing, I can still adjust my payment so that I'm still looking good. I mean, we can always buy down rates too. So
Yeah.
now that we're getting credit back from sellers, so there's ways
Mhm,
that we now can adjust things, and so
mhm.
that sellers, for instance, can contribute to getting us back down to the number that we need to be. So again, like I said, there's always a way out. There's always a way that you can make it work,
Yeah.
especially when you're in like this type of market where you have a slow rate of increase in value, or in prices, right? And actually, it's kind of going down. It's adjusting itself, but technically, it's
Mhm.
going down. But interest rates going up. So now you have a whole lot of space there for sellers to now contribute to the areas that they would not have done it
Mhm.
before. And that can be, and so what does that look like? Like, so for sellers, right? I think in conventional, there is a certain amount that a seller can uh, contribute, and then also for FHA, is it two different amounts that they can
Yeah,
contribute?
typically, it also depends on down payments. I would say a
Yeah,
safe number just to kind of keep in mind, and then of course check with your lender
yeah.
based on your down payment. But 3% is pretty typical.
Hmm.
Conventional sometimes will allow up to 6% if you're putting 20% down. So
Hmm.
there's quite a bit.
Hmm.
The credit can never exceed what your actual costs are, though. They're not going to just let the seller give
Right.
you X amount. To be
That
less
was
than
it. Yeah.
has to be all used up. But
Hmm.
no, I think it's amazing how you open up that conversation to where you never have high purchase prices and high rates, right?
Yeah.
They all balance each other. So right now, when you're having, I wouldn't say values falling, because they're
Hmm.
still increasing, just not as quite as much as how they have been
Hmm.
the last 2 years. So
Hmm.
now you're having an actual conversation with the seller. There's actually room for negotiation. So
Hmm.
you're going to get a better purchase price while the rates are high. The biggest thing people have to focus on is, you're never going to be able to change that purchase price, but rates, we know rates are going to come down, whether it's
Yeah.
6 months or 15 months from now. So get in while you can.
Hmm.
Yeah.
Hmm. And then and that's the very thing. Get in while you can and sit on it. You can
Mhm.
always refi down the later, down the down the
Down the road.
pipeline. or,
Mhm.
going in at a different, it all depends obviously on your situation, everyone's different, but going in with a different loan product as well. So
Mhm.
those are always, I mean, again, this is chess. We can
Yeah.
always move anything around in order to make it work. It
Yeah.
may not be the most desirable, but we can always move it around, make it work, and make the situation better later on. And sometimes, again, we are at the, the mercy of the market when trying to make things better. But it is possible that we can make things better. Maybe even after 6 months, things can be a lot better. But you got your foot in the door so that you can capitalize on the equity. You can capitalize on, hey, those that waited and said, I'm gonna wait till like the winter time. And then we're looking at the people like 2 months ago that were getting in, like, why are you doing it now? You should wait. Well,
Yeah. Yeah, everybody waits at the same time, and then what's gonna happen, you guys? You have to think about if everybody's waiting, then that means all those same people are gonna jump in at the same time, and then you can't get in because it's too competitive. Like, these are the
right.
windows that you have to take advantage of. You have to soldier through and make sure that it makes financial sense for you. But that's where we help. I mean,
Yeah.
it's never gonna be something that can't be done. It just means you have to adjust. And that's why it's so important. You need a team that's really gonna adjust with you instead of just getting that one analysis and then you're out shopping for something that's not even it's expired a day later. So,
Exactly. No,
mhm.
I'm very, very aware of that. So next, what we're going to talk, we're going to come back and we're going to then discuss what it looks like for like different type of buyers, right? Whether it be your investors, whether it be your regular run of the mill buyer, even FHA, and then talk about the differences of what you need to be looking for, and especially like honestly, it may not be the best market for you to actually purchase in. It just really depends on your final and your end result. So stay tuned. We're coming back. Faith in home buying, equipping people of faith for the home buying process. All right, back again and talking about some wonderful ways which we can navigate this market, giving specific examples, especially with rates increasing. But guess what? There's hope in everything. And what we are trying to accomplish, and you listening, is to let you know that, hey, there's one way to, I hate to say it's to skin a cat. It's more than one way to skin it. I wouldn't want to be skinning a cat, but there's more than one way in order to make homeownership a possibility and a reality for you. And so, Audrey, before we get in, I just want to make sure that we give out your information so people know where and how to contact you, and if you have anything going on.
Oh, thanks. Yeah, you can always reach us, Hutton Mortgage Team on social media. Give us a call at 408-426-8755. And you guys definitely keep an eye out because Tamika and I have some fun things brewing for you. Tamika is a soldier in cheering for our first-time homebuyer clients and veterans. And so we're going to be coming out with some seminars for that so that way you can get some information on that.
Exactly. And thank you for that. And then also, hey, you can catch me Instagram, Tamika Ellsworth, or on TikTok, real estate underscore T 408-561-7922 is how you can catch me. And actually, I've had a couple of people call me and they've been getting some great information. So I'm really loving this season because I'm getting a lot of viewers or listeners, viewers, podcast, calling in and asking questions and actually taking action. So I'm really loving that. It's not a time for fear. It never really is. I mean, we really, honestly, it's just not good to operate in that way. But to get as much information as you can, so you can make informed decisions. And those that did that beginning of the year, even leading up to here, they actually saved money on taking a chance and taking a step. So I'm all for that. But so coming back to, and then also to just to let you know, I am doing the speaking engagements. What's next for real estate? That is October 5th and 6th in San Diego. So it's going to be live streamed as well. You can check on my Instagram page in order to find out more information. But your girl is going to be talking at about 10 a.m. Pacific Standard Time and just explaining a little bit on how, in the midst of a pandemic, crazy COVID, I was able to assist in over 40 something people getting into homes, and specifically at my church. I was able to get the pastoral staff and executive staff into homes for the over that 2 year period, and it was absolutely amazing. And by miracle, status, faith, whatever. But it is also something that I want to talk about on just giving called and purpose. And so, yeah. Tune in if you can. October 5th and 6th, what's next for real estate? So let's talk about Audrey. Depends. So let's talk about the different type of buyers and how certain changes, like for instance, where we're at right now, how it affects their purchasing power for like a investor or just kind of like your regular homeowner, a home
Yeah,
buyer.
absolutely. And this is where we always differentiate and say different advice for everybody. If
Hmm.
you are an investor, it's going to be a lot more volatile. So
Yeah.
what we are seeing, I am seeing more investors than ever look at luxury properties, look at properties that they can Airbnb. That has just
Mhm.
completely taken off the last, 5 to 8 years.
Yeah.
And I'm seeing more and more people, not just investors, but our regular clients saying, hey, I need a tax write off. I need to think about my retirement. Let me purchase in this market, even though the rates are high. If you guys have ever done an Airbnb, you know how much you're paying per night. I mean, so even though the rates are higher, it's still highly lucrative for investors that are looking to get into these short-term rentals. So that's huge. And there's programs that have specifically come out just to accommodate those people, like the DSCR program, where you're literally just qualifying by rents. They don't look at income or anything.
That's right.
So yeah, you can compare that to the buyers that are looking to get into something for their primary residence. And again, this is where we look at to see the pros and cons of this market. What is going to be in your best interest? You can wait if you're afraid. No one is ever going to ask you to do something that's beyond your comfort level.
Hmm.
So, weigh what happens in this type of market where interest rates go up. There's a lot of people and landlords that try to get in with adjustables and now their payments increasing. If this is just, again, it's a cycle. So we're going to start seeing a lot of landlords that if they can't afford their mortgage payment, who's the ones that get impacted? It's the renters. So whether you want to buy now or not, be aware that you have to be prepared to potentially move, right, over the next
Yeah.
year. So it just happens, you guys. If you don't have control, if you're not the owner, you might get that notice, right? So it happens in cycles like that. So you have to look at, are you getting any tax benefits? Are you in control of where you're living? Is that worth waiting, getting into something where you can get the tax benefit? Nobody can tell you that you have to move over and over again, and you
Hmm.
know that you can afford it, and then it's just going to get better from there as the rates do go down. So it's kind of what we compare for those two particular buyers.
Right. No, and then different type of investors, right? So it does make a difference on if someone is holding and about to hold and maybe rent out, so they're going to purchase
Mhm.
hold.
Yeah.
So if they're holding, maybe they did go in and kind of leverage their money for a loan and just kind of hold on to their cash versus buying it straight outright cash. So
Yeah.
for them, they're all right. They're in their okay situation. Even if it does go up and down, they probably have a 15-year fix, or maybe they got in on an arm for 7 years, but they're still okay because they got money coming in.
Mhm.
And it's much better to put your money in an asset than it is to put it in any type of market right now anyway. So that's number one. But then you also
Mhm.
have those that are investors that are looking to flip. Now, in that situation, you may want to back up just a little bit. And I say that too, just because it's taking a little bit longer for homes to sell, especially if you're in, what is it, more of a private money lending. So if you have a certain amount of time in order to sell that property, and we're taking like, an average of maybe 2 months in order to sell a home, you may want to make sure that you're looking at the correct market that you're going for, number one. And number two, make sure you know the amount of days, the average amount of days that it's on market, so that you weren't holding the bag for an extra month when he would anticipated it selling in, a month, and now it's going to take around 3 months. That may hurt you.
I'm so glad you mentioned that because that's something where I think even people that don't own real estate yet, right? They have all those seminars. I see them everywhere, right? Like, hey,
Yep.
get into real estate, buy, invest, flip. And it's so important that you have a lot of experience before you do something like that and a lot of reserves. Because here's a classic example of how fast a market can change. You know
Hmm.
that when you see inflation go up like crazy and you see the stock market tank, it's cyclical that typically within 3 to 4 months, the real estate market follows. So if you're an investor and knew that history, I obviously we have some clients with that fortunately they were experienced and they follow our advice. They
Yeah.
had their reserves, but man, you when a market is shifting, you don't have a lot of time to
Yeah.
react and get that property done and get it on the market and sell it. So, you definitely have to be very careful as a flipper right now. Yeah.
Right. And I have to say this, like it's a real, I mean, there's never a dull moment. Like these last 3 years have never, 4 years just about, it has not been a dull moment. I mean, anybody coming in, you really have to assess their situation
Yeah.
because man, it's been keeping me on my toes, that's for sure, as an agent. Making sure, okay, what area are you buying in? Okay, how much are you needing to spend? Okay, what are you looking at a home? Do we have to kind of downsize? I mean, there's so many factors to look at, and like we
Yeah.
were talking about before, it's extremely unique because things usually take a while. It's usually like a hyperbole, right? Like where it takes a
Mhm.
long time. Well, not a long time, but it takes a longer time for the market to adjust and
Yeah.
change. But
Mhm.
we've seen so many rate increases in the last just year.
Yeah.
It doesn't usually happen like that. I'm assuming.
Yeah, not at all. It's broken records. I mean, we've never seen the Fed increase the Fed rate this much, right? They've done multiple three-quarter point hikes.
You're
So,
right.
and that doesn't directly affect interest rates, but then you have these investors and the banks that are buffering up when they see that. So, there was one day, the last hike that they did about a month ago, rates actually dropped, and people were
Yes.
really shocked about that. But still, it's the overall affordability where we're seeing, if you have an equity line pulled, if you have a car loan, if you see your credit cards, all those, everything's going up
Yep.
faster than it ever has. Yeah.
Right. Exactly. And I'm looking at that too and thinking like, oh, interest only payment on my
Yeah.
HELOC. Oh,
Yeah. Yeah.
this is not going up.
Exactly.
Right. No,
Yeah.
no, I mean, but again, it's an extremely exciting time. And
Yeah.
I'm thankful that just having people around that you can kind of bounce things off of, and
Yeah.
if you are interested in getting into this market, you have to understand too, like, isn't it still traditionally that rates are still at a traditional
Mhm.
low in comparison to previous
Absolutely.
years?
Yeah, I mean, everybody always talks about and uses the example when rates were 17% and
Yeah.
people were still getting in, So you, again, it's just about affordability. We know that it's always going to change. You don't have control over the market. We don't have direct control over what happens with, the government or inflation and all these things. But if you wait, I mean, think about those people that if they never bought at all, there would never be a good reason to buy. So
Mhm.
you have to just look at the pros and cons, the advantages, and I really advise get close with your CPA or tax advisor. If you don't have one, get one because you really need to look at these numbers instead of just assuming things and just listening to the news or the media. You have to look at your individual numbers because when they call those statistics out, most of the time they're just based on a national average. It's not necessarily for the individual area, and a lot of the data is skewed. So,
Mhm.
even if you don't think you're going to buy for a year or two, if you're still saving, just have that analysis done so you're actually aiming for the right goals to take advantage of this because the windows like this are rare. They're rare and
Mhm.
it's happening and it's,
Mhm.
something to look at.
Right, exactly. Well, I'm excited because we have a couple of buyers that are now still diving into the market, and really honestly,
Yeah.
agents, it's really up to us, agents and also finance, like
Mhm.
loan officers, everyone. It's really up to us and how we our narrative when it comes to buying and selling, because they're really looking at us for input. They're really looking at us to see what we're saying. And if we're positive about it and we're saying, don't worry about it, we're going to get you into a home, well, then guess whose information that they're going to listen to, hopefully, and not all the other noise that's happening on the news. Family, friends that have never purchased in this type of market. So
Yeah.
anyone that says they know it and they understand it, you know what?
Yeah.
You need to go with the people that are actually in it and actually involved with it on a day-to-day basis, and
Mhm.
to really get your information. And even they're still 6 months usually behind anyway. So it doesn't
Yeah.
really happen like that either. So Thank
Mhm.
you very much again, Audrey, for coming on and spreading some knowledge and some insight. I appreciate you as always. Everyone, thank you, Faith in Home Buying, Tamika Ellsworth, and Audrey Hudden of the Hudden Mortgage Team, equipping people of faith for the home buying process. Ciao.